December 15th, 2022. 8 men arrested for allegedly running a $114 million securities fraud scheme. But here's what makes this story different. Some people lost everything following their advice. Others became millionaires. The same stock calls that destroyed retirement accounts also paid off mortgages, funded dream vacations, and changed lives.
We're robbing idiots of their money.
Meet Atlas Trading. For 3 years, they were either the greatest teachers in social media finance or its most successful alleged criminals. The truth? It's complicated. 2018. Perry, PJ Matlock, and Edward Zach Morris Constantinescu start a free Discord server. The promise? Learn to trade penny stocks and build wealth together. What happened next was remarkable. 50 members became 50,000, then 150,000. 2 of the arrested created a podcast, Pennies Going in Raw, that amassed 2.3 million downloads. And it wasn't just hype. People were making real money. Huge money. Meet the winners, the people who followed Atlas calls and struck gold. Tyler from Ohio turned $5,000 into $85,000 in 8 months following their calls. Sarah from Texas paid off $40,000 in student loans. Marcus from Florida bought his first house. BNGO called at 50 cents, hit 15. JAGX called at 30 cents, peaked at $3.50. ALPP called at $1.15, reaching over $9. These weren't accidents. Atlas had genuine winners. Real people living better lives because they followed the calls. But Atlas wasn't just about hot tips. They taught people how markets work, how to read charts, how to manage risk. Free education that some people paid thousands for with trading courses. PJ and Zach broke down complex market concepts into simple language that anyone could understand. Thousands of people learned to trade because of Atlas. Not just following calls, but understanding why those calls made sense. How did Atlas actually work? The system was more sophisticated than critics gave them credit for. Atlas didn't just throw darts at a board. They researched companies, analyzed financials, looked for catalysts, FDA approvals, earnings beats, partnership announcements. When they called ALPP, it wasn't random. The company had announced new acquisitions, revenue was growing, the fundamentals supported the hype. Atlas built something special, a genuine community. People shared research, celebrated wins together, supported each other through the losses. New traders were mentored by experienced ones. People shared strategies, warned about scams, and built real friendships. But to understand what Atlas allegedly did wrong, you need to understand what a pump and dump actually is. It's one of the oldest scams in finance, and it works like this. Step 1, the setup. Find a small company with a low stock price, usually under $5. These so-called penny stocks are perfect because they don't take much money to move the price dramatically. Step 2, the accumulation. Quietly buy large amounts of the stock before anyone knows you're interested. This is crucial. You need to own the stock before you start promoting it. Step 3, the pump. Now comes the pump. Use your influence to hype the stock. Social media posts, newsletters, podcasts, whatever it takes to create excitement and FOMO, fear of missing out. Step 4, the buying frenzy. Your followers see your enthusiasm and pile in. Thousands of people buying drives the price up dramatically, sometimes 200, 500, even 1,000% gains. Step 5, the dump. Here's the criminal part. While your followers are still buying and holding, expecting the price to go even higher, you quietly sell your shares at these inflated prices. Step 6, the crash. Without your continued promotion, reality sets in. The stock crashes back down, often below where it started. Your followers lose money, you made a fortune. Why is this illegal? Because it's deception. You're not sharing investment advice, you're manipulating prices for your own benefit while pretending to help others. Traditional pump and dumps use cold calls and spam emails. Atlas allegedly weaponized something much more powerful: trust and community. When Zach Morris tweeted to 500,000 followers, it wasn't spam. People wanted to hear from him. When PJ posted in Discord to 150,000 members, they trusted him like a friend. The old school model, buy the stock from a stranger who called you. The Atlas model, buy the stock from someone you trust and follow. The government's case wasn't that Atlas gave bad advice. It was that they allegedly gave advice designed to benefit themselves at their followers' expense. Let's break down exactly what prosecutors say happened with ALPP, Alpine 4 Holdings, to see how a pump and dump allegedly works in practice. November to December of 2020. Atlas members quietly accumulate ALPP shares around $1 to $1.20. No public promotion yet, no tweets, no Discord hype, just buying. Private message evidence shows they accumulated over 200,000 shares before any public promotion began. Here's what made Atlas sophisticated. They didn't pick random stocks. ALPP actually had legitimate catalysts, new acquisitions, growing revenue, and real potential. This is crucial. Pump and dumps work better when there's a grain of truth to the hype. December 15th, 3:42 p.m. Zach Morris tweets, ALPP looking like a sleeping giant. Do your own DD, but this could be special. Within minutes, the Atlas community springs into action. Retweets, Discord discussions, YouTube videos, the hype machine begins. The next few days, $1.15 becomes $1.50, then $2, then $3. The community is electric. Success stories start pouring in. Atlas keeps promoting. This is just the beginning. Diamond hands, hold for double digits. January 2021. ALPP hits $9.19 a share. That's 680% from Zach's initial call. The community is celebrating. Atlas is being hailed as genius. But here's what prosecutors say was happening behind the scenes. Atlas members were selling. Not all at once, gradually, strategically. Government evidence shows Atlas members sold significant portions at $6, $7, and $8 a share, while still publicly promoting the stock and telling followers to hold. The community continued buying, expecting 15, 20, even higher, but the smart money, the Atlas insiders, were allegedly getting out. Spring 2021, ALPP begins falling. $6, $4, $2. By summer, back under $2. The dreams of $20 a share evaporated. Those who bought at 8 following Atlas advice, down 75+%. Those who bought the initial call at $1.20 and sold at the peak, up 650%. Same stock, same community. The only difference? When you bought, when you sold, and whether you were on the inside or the outside. By 2022, regulators were paying attention. The question wasn't whether Atlas moved markets, they clearly did. The question was it legal? The government didn't just suspect Atlas of pump and dumps, they had detailed evidence of exactly how it allegedly worked. Prosecutors showed that Atlas members would buy stocks, then promote them, then sell while their followers were still buying. December 15th, 2020, the ALPP trade. 2:30 p.m., Zach buys 50,000 shares at $1.15. 3:42 p.m., Zach tweets, ALPP looking like a sleeping giant. 4:15 p.m., price starts climbing as followers buy. Next day, price hits $2.50. Zach sells half his position. 1 week later, still promoting, followers still buying. 2 weeks later, quietly sells the remaining shares at over $6 a share. But the smoking gun was what they said to each other privately, while telling followers something completely different. Private, we in heavy, start talking it up. Public, just sharing my research, do your own DD. Private, dump half now, let the rest ride while they pile in. Public, diamond hands holding for the moon. The government showed this wasn't just individual traders sharing ideas, it was an organized group working together. Tommy Cooperman's message revealed the system. What Ultra does, 5 minutes later, all of his little minions start retweeting it. They've got this shit down to a fucking science. 8 people coordinating their messages, timing their trades, maximizing their profits while their followers held the bag. Here's why the government said this was criminal, not just successful trading. An example of legal stock promotion. I like this stock because XYZ reasons. I own shares, this is not financial advice. Alleged illegal manipulation. I secretly bought this stock, now I'm gonna hype it to drive the price up so I can sell at a profit, while telling my followers to hold. The difference? Intent and disclosure. If you're promoting a stock you own, you must disclose that ownership honestly. If you're promoting it specifically to manipulate the price for your benefit, that's fraud. But Atlas had a defense. They genuinely believed in the stocks they promoted. Their research was real. Their profits came from being right about good companies, not from manipulation. They claimed they were sharing legitimate investment ideas with the community, just like any financial educator or analyst does. December 2022, 8 arrests, charges of securities fraud and market manipulation. But March 2024 brought a stunning twist. Case dismissed on a technicality. Not innocent, not guilty, just dismissed. The Department of Justice is appealing. The story continues. Today, the Atlas community still exists, smaller but loyal. Some members still follow PJ and Zach's new ventures, others have moved on. The community is split. Some feel betrayed, others remain grateful, and many are simply confused. Atlas taught the financial world important lessons, both positive and negative. The positive? Social media can democratize financial education, communities can help people learn and grow, small investors can access the same information as professionals. The warnings? Influence can be weaponized, trust can be exploited, and education and manipulation can look identical. While legal battles continue, Zach launched his own cryptocurrency, the Zach token. It crashed 66% in days. His response? This is actually a blessing. To supporters, it was innovative. To critics, it was tone deaf. The Atlas story forces us to ask difficult questions. Can someone be both a great teacher and an alleged criminal? Can the same action help some people while hurting others? Atlas changed social media finance forever. Influencers now use more disclaimers, regulators watch more closely, communities are more skeptical. But the fundamental promise remains. Regular people can learn to invest. Social media can be a powerful teacher. Dreams of financial freedom are still possible. For every person who lost money following Atlas, another person learned valuable lessons. For every retirement account that was damaged, another family escaped debt. The same Discord channels that allegedly enabled fraud also created genuine friendships, real education, and life-changing opportunities. Were Atlas trading criminals who got lucky with some good calls? Were they teachers whose success went to their heads? Or were they something more complex? Flawed humans who created something powerful and couldn't control what it became? The legal system will eventually decide their guilt or innocence, but their impact, both positive and negative, is already written in the lives they've touched. Because in the end, Atlas wasn't just about 8 men, it was about a community, a movement, an idea that regular people could beat the system. And that idea lives on. What do you think? Were Atlas trading victims or villains, teachers or criminals? Share your thoughts in the comments below. If this story showed you something new about the complex world of social media finance, hit that like button and subscribe for more investigations into the stories that shape our financial world. Because the truth is rarely simple, and the next Atlas trading story is probably being written right now.